Go ahead and start. Welcome everyone to Enterprise.Expert, a monthly webinar about QuickBooks Enterprise level technology, actually enterprise level technology, and we're featuring QuickBooks this year. Today's episode is Enhanced Inventory Receiving and Inventory Workflows in QuickBooks Enterprise. Today is December 21st, 2016, and this is this month's December 2016's episode. Today's content, we'll talk about a little bit about QuickBooks Enterprise Expert and what the community means, and that would be about 5 minutes. We're going to talk about enhanced inventory receiving. Will be about 40 minutes or so, and then we'll do Q&A for the last 5 minutes. So this should actually take under 1 hour. It's not going to be a long one. We're going to deep dive into one particular feature. What is Enterprise.Expert? Well, we're a community of experts in the enterprise level technology. We do these monthly webinars, which you are attending live, and some of you watch through YouTube with the recordings. We have a website or a blog, which is enterprise.expert, no .com. Just go to http //enterprise.expert, and we have a couple of articles there, a couple of comments. People are starting to interact and ask some questions about the stuff that we're covering here. And then we have our Facebook group, which is our most active community. So just search for Enterprise Expert in the Facebook groups and add yourself to that, and we can continue the conversation. Now, what does Enterprise.Expert mean? Well, the whole concept, it's about enterprise, which is identified as sort of medium-sized companies, the ones that have to use a little bit higher end level software. They are very, very dependent on technology for the operations. On the technology side, we're going to be working with more than just software, but right now we're focused on software, specifically QuickBooks Enterprise, but we're going to move into some add-ons, other ERP systems, databases, hardware. That's kind of our vision here. And then by expert, we're basically welcome anyone that has experience on working with these technologies and these type of solutions that wants to be part of it, so that you can be part. You can contact me, be part of the webinars, or share your experiences in the Facebook group. Now, the webinar series itself, it's once every 3 months. Okay, you register once, you register to all of them, so you're going to be accessing all of them. You're going to get an email with a reminder. We may have some special episodes with collaborated sponsored content. We do not provide CPE for certified public accountants or ACE credit for advanced pro advisors. This is not a webinar directed or geared towards accountants. This is geared towards anyone working in the enterprise level technology profession, which could include QuickBooks, but it could include other things as well. So for now, we have a very strong focus on QuickBooks Enterprise for all of year 2016. Next year, we may be moving to other things. We'll have some secondary focus on hardware, software, or apps that integrate with core accounting systems, and we may move into other technologies, such as hardware or maybe even database stuff beyond accounting. About me, the presenter, my name is Hector Garcia. I'm the CEO of Garcia CPA, which is an accounting and integrated technologies consulting practice and a reseller of Intuit products. And my email is hector@garciacpa.com if you need to reach me for whatever reason. Okay, so let's jump right into the presentation, which is we're going to talk about enhanced inventory receiving. Now, enhanced inventory receiving is Intuit's answer for a prevailing issue we've had with QuickBooks or just any QuickBooks for a very long time, which is having item receipts and bills handled as a single transaction. So when you turn on enhanced inventory receiving, it will split them into two separate transactions. So you will have one item receipt that will be permanently its own transaction, and you're going to have a bill which will be linked to the item receipt, be its own separate transaction. Now, this is only available with QuickBooks Enterprise 2012 or newer. So if you're working with an older version, you won't see this feature. Now, this feature has to be turned on. So before the feature is turned on, let's talk about how QuickBooks behaves now as we speak before we turn enhanced inventory receiving on. So right now, without turning this on, an item receipt currently affects your accounts payable. However, it's kind of confusing because they do not show up in your pay bills window. And we'll do an example of that. That's going to make sense after we do the example. The other issue is once the bill is received, it will supersede and replace that item receipt. And then basically, you're going to lose the history, any history that there is between the original item receipt and the bill itself. And when you lose that history, it could become an issue if you don't have the discipline to make sure that you're not changing dates and that sort of thing. Now, why do I recommend working with this special feature called Enhanced Inventory Receiving? It's because you can have a separate history for your receipt date and a separate history for your bill date for two purposes. One, I want to keep my the history of the day that I got the inventory intact. And I also want my terms and my due date to be also intact based on the actual day that we got the bill or the day that the vendor sent us that bill. Now, there are two big, huge challenges, the two things that you're going to notice right away when you turn on Enhanced Inventory Receiving. Challenge number one, if there is a timing difference between receipt date and bill date, that value is going to be in a new bank, in a new credit account, in a new balance sheet account called inventory offset. And now you're going to see both an accounts payable account and an inventory offset account as a liability. And that's going to be very confusing to a lot of folks. Once you understand it and you go through these webinars, it's going to make tons of sense. But for every single person that turns this on, it's confusing at the beginning. Now, the second challenge is if the item receipt has a particular value and then the bill changes that value. In other words, when we received the items, we weren't 100% sure how much we were going to pay for them. But once we got the bill, we knew for sure how much the vendor was charging us. If that value gets changed in the bill, it will retroactively go back to the item receipt, even though it's a separate transaction. It will go back and change the value of the items in that item receipt. Now, that generally sounds okay, like it makes sense, no problem. The issue is if you receive an item, let's say December 30, and you received it for a particular dollar amount, and then the bill comes in January 3rd, and you already closed the books for last year, whatever your inventory on hand value was by the original item receipt will now be changed retroactively. Even if the period is closed, it won't even ask you, it won't even warn you, but it will change that. So it's really, really important that if you got item receipts that have not been converted to bills or we have not added a bill yet, and it's going to be in a period in which I don't want my financial statements to change, that we move that item receipt date to the future, or we don't enter that bill with a different dollar amount, because that's going to cause a problem. So we'll do an example of that and it'll be very obvious. Now, some really important notes. Once we turn on Enhanced Inventory Receiving, it cannot be turned off. So you can't say, oh, I didn't like it, kind of a bad idea, let me go back. Okay. So unfortunately, this is something that you commit to. Once you do it, done. Now, once you turn on Inventory Receiving, the item receipt will not affect accounts payable. In other words, if I get an inventory received and I haven't received the bill yet, my accounts payable will not be affected. So I could, if I'm used to my item receipts affecting my accounts payable, I will not get an accurate accounts payable number. Now, there will be another account in its place, and you're going to see that on the example once we do the demo. But if you're looking at just the accounts payable, that number may not be accurate because you technically do owe that money because you received the inventory. Now, consequently, once you enter the bill, only accounts payable is affected and your inventory asset will not be affected. So that's the logic, is we're going to separate inventory with accounts payable as two separate transactions. Now, the other, as I mentioned before, if you turn on Enhanced Inventory Receiving, it's going to retroactively change some financial statements. We're talking about even the first day you turn it on. So if you turn it on in an active QuickBooks file, that has 1, 2, 3 years worth of data, and there are any inventory item receipts that are separate from bills, those could change your financial statements. That's really, really important. So the lesson on that is back up before. All right, so let me jump into the product demo, and you should be seeing QuickBooks on my screen here. Now I started with a blank file that has no inventory on it. I got some inventory parts, but I don't have any inventory transactions. So we can actually follow what happens to the balance sheet as we do any sort of inventory activities. All right, so let me go ahead and leave the balance sheet up in the screen. So I'm going to go ahead and pull the balance sheet here to the side. And what I just want to do is I want to make sure I have a live balance sheet going on, because inventory are balance sheet heavy type of transactions. So what I just kind of want is for you to look at the left side of the screen where we got this live balance sheet, and we're going to be monitoring it every time we do something. So let me start by doing a standard inventory workflow, just for the people that don't heavily work with inventory. So the first step in an inventory workflow, for the most part, is for people that sell items that are in stock in the warehouse. We're talking about not special orders. The inventory workflow works like this. We start by creating a purchase order. Okay, and then in the purchase order, we select the vendor on the top left, whoever that vendor happens to be, and then we select which items we're going to be buying from our vendors, right? So whatever items we're buying from our vendors, we add them all in there. Let me go ahead and just add some quantities here. We'll do 1,000 of these and 2,000 of these. Okay, perfect. So we put our purchase order in. Normally, we're going to have our vendors' name, address, all that stuff will be filled here. In this sample file, I don't have it. Where it says drop ship to, I would choose whether the product is coming to my warehouse, which is something that I'm going to stock in my, in my racks, in my warehouse, whatever it happens to be, and then we're going to sell them on demand, or we're going to pick a customer if we want the vendor to have instructions to send that stuff to them directly. For the time being, we are talking about normally inventory that we receive, that we have in stock to be sold later on in the future. Therefore, we're not going to be doing any drop shipment. We're going to be doing a straightforward purchase order. Okay, so when I finish doing my purchase order, I'll go ahead and print it and fax it to the vendor, or email it straight to the vendor, or just save it and then put it on an email order format, however it is that you order your products from your vendor. So I'm going to go ahead and hit save and close. Okay, so then my purchase order is there. If you look at my balance sheet, nothing has changed on the asset side. Nothing has changed in the accounts payable side, just because the purchase order is a non-posting transaction. Then the next step is here on the vendors menu is to click here where it says receive items. Now I'm going to pull up the home page because it's really important to just kind of see it graphically here. So we started with the purchase order, which was the first step. Then we're going to move into receive inventory. Now, for the context of this presentation, we're going to separate inventory receiving as bill as two separate transactions. And we're still working on a QuickBooks file that does not have enhanced inventory receiving turned on. So you're still going to see the two icons like this, and you're going to see both options with bill or without bill. Once we turn on that other feature called enhanced inventory receiving, then you're not going to get two options here. You're just going to get receive inventory without bill as an option. So let me go ahead and click on receive inventory without bill, which, by the way, I know we were following the sequence of the menu. So through the menu, it would be the same way. It would be vendors receive items. So that particular feature, receive items, will take me into an item receipt. Now, next step is on my vendor, I'll hit my drop down and select the specific vendor I'm going to receive from. And as soon as I select my vendor name and click anywhere else in any box, I should get something pop out to let me know that, hey, there's an open PO that we should select from. Okay, so the pop-up comes up that says open POs available. And in this case, I only happen to have one open purchase order for that vendor. But if I have 2 or 3 or 4 purchase orders, I can actually receive multiple purchase orders in one shot. As a matter of fact, let me go ahead and do that just to kind of show the example. So I'm going to create another purchase order, let's say to the same vendor, but it happened on a different day or in a different instance. And we're ordering, let's say, other different products. Okay, so I got another purchase order going. So I got purchase order 4 and purchase order 5 active here. So I just want to show you that when you go receive item receipt, it gives you multiple choices to choose from. Now, it is possible that I create 2-3 purchase orders in one day, and then when my vendor ships me the product, they send it all in one package and all in one packing slip and essentially all in one bill. And if that's the case, you want to group the item receipts together into a single receipt. So I'm going to go ahead and select both of those and hit OK. And then one really important piece here on the right side of the PO, I'm going to go ahead and hide this side screen. You're going to see the PO number. Now, this is extremely important. Pay attention to this, especially if you're new to the inventory world. This little shaded number here, 45, is talking about the PO number. This also lets you know that that line, it's linked. It is directly linked to that item through that PO. So it's if you don't have anything in that column there, or if you don't have the PO number open there, that means that the two transactions, the PO and the item receipt, are not linked. So that's an extremely important item to pay attention to. Now, on the reference number, normally we would put here a package slip number or something like that, which is normally how vendors label or include in the products that they're sending. So I'm going to put a packing slip number or whatever documentation they gave us, the shipping manifest, whatever, that matches the item receipt. Now, sometimes that number matches my vendor's invoice or the bill number in the future. Sometimes it doesn't. So it really depends on the vendors that you're dealing with. So I'm going to go ahead and click Save and Close. And in this case, I have multiple sites turned on. So I'm just going to make sure that I select my multiple sites in here. And I'll hit Save and Close. There you go. So let's go back into my balance sheet. And now you're going to notice that I have an inventory asset, okay, and an accounts payable. Now, again, this is without turning on enhanced inventory receiving. This is a normal workflow that QuickBooks has. All of QuickBooks is from QuickBooks Pro, even QuickBooks Online, all the way to QuickBooks Enterprise behave this way. The issue is that although I have accounts payable, this is where most people get super confused. When I go into vendors, pay bills, my bill for Acme is not here. Now, why is that? It's because the way they programmed QuickBooks is if you do an item receipt that is not a bill, accounting-wise, it will affect my accounts payable and obviously my inventory asset. But workflow-wise, it will not let you pay it until you convert it to a bill. Okay, so I want to make sure that's very, very clear. So the next step is once you, let me go back into the homepage here. So once you receive the item, what you want to do is you want to go to the next step, which is enter bills against inventory. Now, enter bills against inventory is basically a way for me to select my item receipts, the ones that were received separate from bills, and go ahead and select it there. And by the way, I cannot convert multiple item receipts into a single bill. Item receipts still have to be matched one-to-one with the bill. Now, the bill date itself could be the same date of the item receipt, or it could be a separate date that I change. Notice that here it says use item receipt date as bill date. Now, before I hit OK, I just want to show you something real quick. Let me go ahead and pull up that transaction again. Now, I'm gonna change the date of that item receipt to December 19th. I just want to make it very clear. My item receipt currently is December 19th. When I go to the next step, which is vendors and receive bills against vendors, and I select my vendor's name. If I click in this and I don't check this box, my bill is going to retain the same date as my item receipt. If I check this box, if I check the box, it will retain it. If I uncheck it, it will default to today's date for the bill. Now, why is this important? I'm going to go ahead and check it to show you. I'm going to hit OK. So why is this important? Because if I convert an item receipt to a bill, and I have terms. So let's say, for example, I got 30-day terms. These terms start counting from the date of the item receipt. Now, in most cases, our vendor will ship us a product on whatever date, and then we receive it typically 2-3 days, sometimes a week after they ship it. But our vendor will normally start counting their 30 days or whatever happens to be from the day they ship it. So that creates a lot of confusion because sometimes the day I receive it is not necessarily the day that my vendor recognizes as sent. Therefore, this is where the due date comes into play. So I got multiple choices here. I can either backdate the date to the day that the order was shipped and matched my vendor's original ship date. That way, my net 30 terms are clean and everything works perfectly. But if I do this, the problem is I am now retroactively going back in time and changing my inventory asset going back to the original bill date. And where this poses mostly a problem is when the item receipt date and the bill date are different and it crosses periods. So if it crosses, year 2016 to 2017, or even when it crosses a month or a quarter. So this is the real issue with not using enhanced inventory receiving. Anyway, so let me go ahead and hit save and close. And I'm going to now look at my balance sheet, which at this point shouldn't change at all. It should be the same accounts payable and the same inventory asset. Now, what changed by me converting the item receipt to a bill, what changed is that when I go pay the bill, now it shows up in my workflow ready to be paid. So that's an important lesson to just kind of get about the standard procedure of working with standard inventory workflows. Now I'm going to go ahead and switch here to multi-user because I'm going to go into the settings and turn on enhanced inventory receiving so you can now see the difference in contracts of how that will work. Okay, so I'm going to go into the edit menu and then I'm going to go into preferences. So I'm going to go to edit, preferences, and then I'm going to go down to items and inventory, and then I'm going to click on company preferences, and you're going to see right here where it says enhanced inventory receiving. Now, not to be confused with advanced inventory, two different things. And I did another webinar a few weeks ago on advanced inventory receiving. So it's going to be a whole nother concept. Okay, so we're going to now click on enhanced inventory receiving, and I'm going to click on enable. And now notice that it gives you a big warning. It says, wait, remember, as I mentioned before, once you turn this on, you can't go back. Okay, there's a little link you can click which shows you a document where it kind of walks you through all the things that are probably going to change. So you may have to, it's going to explain to you that there's a change in procedure and be aware of all these issues. So as I mentioned before, do a backup before doing this. Now you could potentially have a change in reactive financial statements once you do the conversion. So let me go ahead and click on continue. Okay, now it's turned on, so it's kind of a simple process. And then I'm going to hit OK. And then OK. And depending on the size of the database, this could take literally hours. In my case, I have a really simple file, so it should do it pretty quick. Now, if there's errors being detected, maybe some corruption or something like that, it will actually walk you through the process and request you to do a backup or a rebuild. So let me go ahead and do a quick backup or rebuild on this file. This is a kind of a small file that I have for testing, so this shouldn't take that long at all. So I'm just going to go to the standard procedure of backing up and rebuilding because this is going to be very, very, very obvious for you. Okay, so let me now go ahead and do the rebuild. And while I do the rebuild, and I wasn't really counting on doing a rebuild in a live demo But this happens, right? Data gets corrupted, and you have to do that. You have to do that before. So let me go through some of these questions. So somebody says, if you turn off and on enhanced inventory receiving in a sample file, does it stay turned on once we open the sample file back on? And the answer is yes. Like once you turn it on in the sample file and you go back to the sample file, you are going to have that permanently in there, unless you reload a sample file again from the backup, because sample files are pre-backed up. Somebody says, do you recommend doing a backup and verify before switching to enhanced inventory receiving? Yeah, I not only recommend it, Keith, I'm telling you, you may be required to do so. Notice that that is exactly what's happening here. Okay, so once the conversion is done, it will tell you if there's any new value to the inventory offset account based on historical transactions, which in this case, it does not. And it does give you sort of a quick summary of all the things that are going to be changed and updated retroactively when you convert a file to enhance inventory receiving. So I'm going to go ahead and click close. And now I'm going to open the home page, and I want you to see something that's going to be very obvious and visible, okay? Which is, if you notice the QuickBooks homepage before, normally you had a button here that says receive items with or without bill, and then there used to be an icon here that's not there anymore that said receive bills against or create bills against received items. Notice that that disappeared altogether. So now we have just visually an entirely different workflow. Okay, so let's do another example, similar example that we did before. So I'm going to click on purchase orders. I'm going to select a vendor to do a purchase order for. I will pick some of the items that I'm going to buy from this vendor. Okay, we'll pick some quantities here, whatever they happen to be. Okay, and then I'm going to go ahead and hit save and close. The next step is I'm going to click on received items. Now this screen, it's almost identical to the first screen, almost, okay, almost. There's two key differences here on the item receipt screen before we turned on enhanced inventory receiving. One is usually up here where my cursor is. Hopefully you can see my cursor. There used to be a little box that says bill received, and that box literally just converted an item receipt to a bill on the fly. Okay, that's not there anymore. And the other piece here, you're going to see here where it says items. There used to be a tab here on the right side that said accounts, or actually expenses, that allowed you to pick where you can put some things straight into the chart of accounts instead of going through an item. So once you turn on enhanced inventory receiving, that will not be an option anymore. It will make item receipt truly an entirely separate experience from the bill experience. So let me go ahead and receive the inventory. I'm going to go ahead and pick the open bill I have against this inventory. Okay, I'll just bring in that information. Same thing applies here where you see the linking of the PO. On the reference number, I'm going to put my packing slip number, whatever is our vendor sent me. And I'm going to go ahead and select an item receipt date of the 19th. So I received this product in my physical warehouse on the 19th of December. So I'm going to go ahead and click save and close. I'll pick my inventory site, which I have turned on multiple warehouses, and hit save and close. I'm going to go back into my balance sheet, and then we're going to see what's going on with our balance sheet. So I got my inventory asset account, which is accurate. And now my accounts payable, notice that it didn't change. My accounts payable is still $199,750. And the issue with that is because we separated item receipt from bill. Now QuickBooks created a brand new account called inventory offset account. This is the stuff that just blows people's minds because most people get confused about this brand new account that gets created. So this inventory offset account is what accounts payable would be if we had received a bill instead of an item receipt under enhanced inventory receiving. So that's neat because it separates the two processes and it doesn't put it into my accounts payable and confuse the user when they go pay the bills, where they don't see a bill there that is somehow accumulating in my accounts payable but omitted from the screen. So that's actually one of the big advantages of it. Now what are some of the implications of this? So let's talk about this. Let me go ahead and make this report a little bit smaller so we can see what happens. Let's say, for example, I'm going to go back into my home page. So let's say, for example, that now I'm going to go ahead and enter that bill against the item receipt. So I'm going to click on Enter Bills. And then I'm going to select my vendor. And then it says you have some open transactions. I'm going to go ahead and click Yes. And then this is going to tell me that there's an open purchase order against this bill. Now, it's no longer going to just show me item receipts. It's just going to show me purchase orders, okay, because it's still tied to the original purchase order number. And then once I click OK, now you are going to see a bill now that is now tied to the PO and also tied to the item receipt. So you don't have to worry about picking the specific item receipt. But let's say, for example, that now this bill starts on today's date, on the 21st. And let's say it's 15 days payments. But when I receive the bill, the dollar amount changed. That's a really important piece to keep in mind. So before I change the dollar amount, I just want to show you something real quick. I'm going to go ahead and click Save. And then I'm going to go back into my balance sheet. And you're going to notice now that my accounts payable is now 253 the way it's supposed to be because it's combining both accounts payable because I received the bill. But that's because this balance sheet is dated 12/21. If I actually go backwards and bring the balance sheet back 2 days, you're going to see that my inventory offset account is split off. So what's nice about this is now I can keep my history of when I received the item versus when the bill was created. And at that point, it moves the transaction from inventory offset back to accounts payable. Now, where that's particularly valuable, and I'll show you what I mean by that, is if I go into that bill real quick, let's say this appliances here. So if I go into my item list and I go look for my appliance item and I right click on it and click on quick report, it's a really important piece. So I'm going to do a historical analysis of that item and I do a quick report. We're going to see that inventory came in on 12/19. No longer the bill being on 12/21 affects the historical value of my inventory when I originally received it. In other words, with enhanced inventory receiving, I actually maintain the difference between when I got it versus as of when I'm supposed to pay for it. And this is one of the big issues that QuickBooks has before enhanced inventory receiving, that most people, when they create a bill, they'll change the bill date to match the vendor's invoice date, and then they mess with the history. Now, where this could be particularly problematic, and I'll show you where it could be, is if I actually sell that product, let's say in between those 2 days. So let me tell you what I mean by that. So let me go ahead and create an invoice. And this is when you start seeing the value of this feature. I'm going to go ahead and create an invoice on the 20th. Okay, and I want to show you the balance sheet on the 20th as well. That way we don't have any issues. So I got my balance sheet on the 20th. I have my inventory asset in stock. I'm going to go ahead and sell a couple of those items. Let's say I'm going to sell 100 of them to this great customer that we have here. Okay, and I'm going to hit save. So like normal, like it's supposed to, my inventory asset goes down, my accounts receivable go up. That's all expected behavior. We're good to go there from that perspective. Now, the challenge that I could have is, what if I went back and when I received that, let's say, for example, I was not using enhanced inventory receiving. Go back here for a second. and I had actually changed the receipt date to match the bill date, which happens to be 2 days later. So I'm going to go ahead and do that and show you what the challenge is. So the problem with doing that is when I go back into my financial statement, again, if I had matched my item receipt with my bill date, which happened to be a few days after I sold the product that I had received, I'm going to go run into a negative inventory asset situation. And everybody that works with inventory knows that that is hell. Okay, for accounting purposes, you never want to have negative inventory because that's going to cause a mess. Now, in hindsight, if we're talking about 2 days difference, once we actually close December, that's not going to be a huge problem moving forward. So if I move forward to the next day, my inventory goes back to positive and I don't have to worry about it anymore. But for some of these larger companies where this situation may happen crossing a month or crossing a period or crossing a quarter, we may essentially have the wrong numbers when we're looking at a financial statement, a balance sheet, a profit and loss of a particular month or quarter, and we have this issue where it breaks out into negative inventory and that sort of thing. So that's really the underlying value behind using that feature, is being able to prevent that issue from happening. Okay, let me go through some of these questions here. Somebody says, is there a report that will show you all the item receipts in the inventory offset account that have not been cleared by a bill? So this question is by Bill. Your name is Bill as well. So yeah, we can do that. Let me show you that. So let me first go back into my inventory asset account. Actually, no, let me go into my accounts payable account and let me delete one of these bills. Okay, and I'm also going to do the process again. So I'm going to go into create a purchase order. So I'm going to create an entirely different vendor, pick a different vendor here, and I'll pick some other items, different items altogether. And then I'm going to go ahead and hit save and close. And then I'm going to go ahead and receive the items, but not create the bill. So I'm going to receive the items and I won't create the bill. So again, what are we trying to do? We're trying to see, is there a report in which I can see what's inside of my offset account that has not been converted into a bill yet. So we'll show you what that would look like. So we're looking at my at my balance sheet here, and I got 214,000 inside of my inventory offset account. If I double click on that, again, I only got a couple transactions. That's easy to identify. However, when you're working with a larger company that has 100 transactions in there, that could be an issue. Now, I'm going to go ahead and click total by and click vendor. So when I double click on my inventory offset account and total by vendor, and I'll go back here the entire year, we're actually going to see all of our transactions split up by vendor. So to answer your question, this report in itself will really quick tell you the ones that have an open balance are all the ones that still have an outstanding item receipt that has not been converted into a bill yet. So that's kind of like the first answer to your question. The other thing is to enable some custom fields here. So now we're doing more report work. I'm going to show you something else. I'm going to enable two custom fields. I'm going to enable the clear custom field, and I'm going to enable the paid custom field. It's a little bit confusing, but I'm going to go ahead and enable both of these fields here. Not a custom field, but a field paid and clear. So right now, we're going to see that everything is marked unpaid, which has really nothing to do with paying a bill or not, but everything here is marked unpaid. So that could be sort of one way you can identify item receipts that have not closed the entire process. Okay, let me go ahead and pay that bill by Best Buy. So I'm going to go ahead and go pay bills, and I'll pick that Best Buy bill and pay it. So we go back into this report. Now these are going to be marked paid, so we can actually see how that entire process works. Now, if I wanted to just show the item receipts that still have a pending bill that have not been created yet, the paid and unpaid doesn't work. It does work visually to kind of know which ones have closed the circle. So the ones that we're going to use is the clear ones. So when something has been marked cleared, we want to get it completely out of this report. So the way we do that is we reconcile the inventory offset account. So for that 6% of you that mentioned at the beginning that you already have experience with this, hopefully at least this will be new. So let me go into banking and click on reconcile. And then I'm going to pick my inventory offset account. I'm going to reconcile that to 0. And let's say I'm going to reconcile it up to, let's say, yesterday. And I'll click continue. So what you normally do is once you close this period, what you want to do is you want to be reconciling this account to make sure that whatever accounts have been completely closed, whatever cycles have been closed, they're marked cleared, and we can filter them out of the report. So I'm gonna, just to be able to identify, I'm gonna click on the modify button here on the right, and I'm gonna not modify, sorry, columns to display, and I'm gonna go ahead and select payee, and then I click OK. So I see Best Buy, and what I'm gonna do is I'm gonna sort them by payee, sort both by payee, and then I'm gonna grab everything that belongs to one vendor and everything belongs to one vendor on the left and the right, check them together up to the point that I get a difference is 0. And basically I'm quote unquote reconciling my vendors, item receipt and bills. So I'm going to go ahead and click reconcile now. And this has nothing to do with reconciling a bank or anything like that. We're just reconciling my inventory offset account for the purposes of getting into this report, where we now see that the 2 Best Buy transactions have been cleared. So that being said, we can just run a simple report filter here, and then we can go into filters and then go into clear and put no, and then hit OK. And now we can label our report the way it's supposed to, which is item receipts pending bills. And then we hit OK. So that's going back into that question that I got from you guys, or somebody asked that question. Is there a report that will show me all the item receipts in inventory offset that have not been converted to a bill? And that's the answer to the question. So Bill, who's the person that asked the question, just let me know whether or not that answered your question. Somebody says, I'm scared to turn on enhanced inventory receiving because I won't go back. I wonder if there is an article out there warning me or telling me the reasons on why I shouldn't turn this feature on. Now, I want to make a very clear statement here, okay? For me, it doesn't make any sense that a software manufacturer will add a feature that would literally implode or explode your QuickBooks file. I personally have used enhanced inventory receiving with a couple of clients. There has been some scattered reports, okay, not by Intuit directly, but by other users, incredible people in the industry, that says that this will increase the probabilities of data corruption. There's no clear explanation on the specific reasons why, but there is. And anytime that anybody warns you that something you do may actually create data corruption, it's actually a pretty big issue. So Jennifer, you were asking, I'm scared to turn it on. Is there an article? If you actually do some search on it, a few people will actually tell you that's a warning. There's a warning that you need to know. Now, I personally just kind of hope that the data doesn't get corrupted, and I hope that that turning on this feature actually adds value instead of removing value into the workflow. But I strongly believe that for the companies that need that separate history between receive date and bill date, that they turn this feature on. Now, I'll make another recommendation. If you have the discipline to never change the bill date to match your actual vendor's bill date, and you always make your bill date your actual item receipt date, then there's no need to turn this on. Okay? So again, if you have the discipline to never change your item receipt date to your bill date. In other words, when you create the bill for the inventory, you actually use the item receipt date as the day and not the physical invoices date from your vendor as a day, then you don't need to turn this feature on. And also, if you're a little bit scared about that, the way it looks in the balance sheet with this inventory offset account, let me pull that up again. If that's confusing to the end user, then don't do it because you can rename that account all day long, but it's still confusing. Like, I guess if you were to call this, and this is what I think would probably be just a better approach to this. If I was to give this another name, if I were to call this item receipts pending bills, something like AR or something like that, that is just kind of letting you know, AP, letting you know that this is pretty much accounts payable and drag. If you were to do something like this, would that enhance the experience? I think so. I think inventory offset account in itself, it's actually, it lends itself to confusion. So if you were going to do this, I think renaming the account could be a good idea, but it doesn't really solve all the problems. Okay, let's see. Somebody says, warning: if you change the cost in a bill, or retroactively change the cost on the PO. That's a good point. I'm sorry, on the item receipt. That's a really good point. So let's take a look at this item receipt here for a second. Okay, so this item receipt here doesn't bear any cost. Like, you really can't even see a price anywhere here. However, if you look at this on the report, you see that this item receipt is worth $15,000. Now, if I go and receive this, I'm going to leave this report open here, and that's another really important thing. And I think Karen is the one that made that comment. Hi, Karen. Thank you for that. So if I go and receive the bill, so I'm going to go ahead and enter the bill, and I'm going to receive the bill for, who's that vendor? Building supplies. So I'm going to receive it for building supply, but I'm going to select the PO, but I'm going to change the price, because let's say, for example, it's not $76, is $86. Okay, so I'm basically changing on the bill the price of the item. Now, something I want you to look at, I want you to look at that $15,000 that's in there, and I'm going to hit save. Now you're going to see that my bill changed, but also QuickBooks retroactively went back into the item receipt and changed that number. That means that my balance sheet for that day changed. And it also means that if I sold the product between the item receipt and the bill date, then my average cost will also change. So that's a really important, I mean, this is all like sort of accounting nerd stuff, but it's really, really important, right? Because you can be working with a client or working on your QuickBooks file and not think about accounting. However, the accounting implications are really, really important. And then I'll just go to the last slide here. And I got in some feedback that you wanted me to cover less features, but go more sort of in depth in the features. So I was kind of trying to satisfy that feedback, and that's what we're doing with enhanced inventory receiving. Just trying to just pick one feature and go as in depth as possible as we can do. Anyway, thank you for attending. The next webinar will be in a month. So Happy New Year to the folks that I won't talk to or see between now and the next webinar. It would be on 1/18th, and then we will be doing importing data into QuickBooks Enterprise. So we'll talk about all the different ways to import data into QuickBooks Enterprise. Anyway, visit the website, Enterprise.Expert, still kind of under construction, but send me some feedback. Join the Facebook group, continue the conversation. There's my Twitter handle. There's my email related to Enterprise.Expert. So just go to Hector at Enterprise.Expert, or you can send my personal work email, Hector at GarciaCPA.com. If you have any comments, if you're an expert in a particular subject matter and want to get involved, I'll definitely welcome that. Otherwise, happy holidays and Happy New Year.